Hello, how is swing trading different from day trading or long-term investing? Well, swing trading is about trading on one swing, on one side of the swing. So if we look at to let's take a one of the stocks that we are going to analyze today and look at the chart. So when we look at this URI chart, you can see that the price is swinging or is making a zigzag along its trajectory. So swing trading is about trading on one side of the swing, buy and sell. So it's like the price is making a zigzag. So if we say zigzag, swing trading is about trading on the zig side of the zigzag. You can swing trade on the zag side by borrowing stocks from the broker to sell, and then when the pullback is on its way down, so you borrow to sell, and then at the bottom you buy and pay, and the difference will be your profit. So you sell it at a higher price and buy at a lower price, type of things. I don't do that. I don't know how to do that just yet, but I focus more on buying and selling when it's on its way up. So the price is making mountain, so claiming the mountain and claiming down. So my strategy, which is for this year 2025, is long option swing trading strategy, consists of buying when the stocks pull back to the support line, that is the valley support line, and start going up from there. After I see few higher lows, I will purchase the stocks and or some shares, and then when it reach some highs, I will sell it to lock in my profit before it start going down. So swing trading, whether you are doing it in a short period of time, it will usually consist of buying and selling on one side of the zigzag that the price is drawing as it's moving, because it's going down and it's going up and it's going down. In 2024, I swing traded using short option and swing trading strategy, and every few days, if we take this stock from instance, I have those arrows to show where I purchased and where I sold. So arrows facing upward are where I purchased, and arrows facing down are where I sold. So if we take this stock for instance, and we look at 2024, I purchased it there on February 9. The date is on the x-axis from the past to the present, and the price is on the y-axis from 0 up. So I purchased it on February 9 and sold it on February 15. So we have maximum daily chart open, and that's where we are doing the analysis. So you can see that we purchased it along this trend line. So we have this longer trend line that we are following, and that is the trend line. It's a short trend line but up trend line, and that is the trend line we are buying on. But I purchased it there, which is a little bit higher than a little bit higher above this support line that we are buying on. So when the price went up, pull back, the red bar is days that the price at the end of the day was lower than the morning when the market opened. So those are pullbacks, and the green bars are the days that the evening price was higher than the morning price. The price went up. So when they pull back and start going up, so we have a green bar here, and then they pull back. And when it start going up, I purchase it. It went up, but then it pulled back to the support line. And when it went up from there, I have a little profit. I sold it. It pulled back, and then it start going up, pull back, and when it start going up here again, I purchase it, and the next day I sold it, because again I have a small profit targets, and when it reach that target, I will just get out of it. But then it continue. So this is swing trading from few days to few weeks, and sometimes to few months. That's the duration you can hold a trade and call it a swing trade. But a swing trade is just the price is making zigzag, and you are buying it on one side of the zigzag. You are purchasing it here and selling it somewhere here. So that will be, because this is a zigzag or a swing, and you are buying and selling it on one side of the swing. And sometimes, depending on the strategy you are using, you might hold on to it until it start going down, and when it breach a certain level, you have a confirmation that is going down, and you'll want to sell it before it goes lower to where you purchased it originally. So that will be buying and selling, past the swing, going into the zag. But with the strategy that I use, I tend to see if I can buy and sell it on one side of the swing. And in 2024, I did that quite a bit, and I make some purchases that I purchased it there, but it was not down. It pulled back further and then went up, because I tend to buy on days that is growing. But sometimes, because I make my purchases around noon, by the end of the day it could change color. But then, and you can see I purchased it there and sold it there. So every few days I will purchase and sell if everything goes according to the plan. And I did that in 2024 with this stock. And I purchased it there again, but it was away from the support line that I was purchasing it on, unless I was following. Shouldn't have done that, because I saw the stock yesterday. I have that arrow on, so and unless I was following a trend line like this, let's remove it. I purchased it there, and then that trend ended. It pulled back here and start going off from there. So I got trapped in the trade all the way and sold it there. And that, because you can see that the price corresponding to this level is higher than this level, so I made a profit on that trade, but I stay in it longer. So that is swing trading. For day trading, which I don't do, will be to buy and sell it the same day. You'll notice that for my swing trades, I'm holding the stocks for more than a day. So that is swing trading, and I'm trying to, you saw some of them that I purchased and sold the same day. For a day trader, which I don't do, they will use a shorter time frame. For my swing trading, I use maximum daily chart or 1 year daily chart. It will show me about 52 weeks time frame on my screen, which I used when I was using short option on swing trading strategy last year, because I was trading on a shorter trend lines. I didn't need the whole picture in front of me, but I started with maximum daily chart to see the overall, to see a bigger picture, and then I'll move to 1 year daily chart to have closer look of what I'm doing. That way I won't have to keep zooming. And from here I use 3 months daily chart as well, because with 3 months, when I'm purchasing a stock already, to start purchasing that stock, I will start with maximum daily chart to do the analysis, and 1 year daily chart. And once I purchase that stocks and sold it, to purchase it again, I can just do 1 year daily chart or 3 month daily chart. That way, because I was swing trading on a short uptrend lines, I can just see if the candlestick easily without having to zoom when I'm doing my chart analysis of all my stocks on a daily basis. I can just see what is going on easily, because the candlestick are bigger on my screen when I'm using those short time frame charts. When it comes to day trader, I will imagine they will use even a shorter time frame, because they are trading, buying and selling in a day. Therefore they could use minutes, hours, which I took those off of mine. We have 1 hour time frame here, and it's just going to show you 1 hour. You can see it's showing you the days from, let's say, from Tuesday, let's say from Monday to Tuesday. So it's showing you the hours. So you might have like a candlestick there between those when the market was open, if the market is open for 8 hours, for instance. And I know some will use 30 minutes or 15 minutes. So those are the type of charts day traders will use. Short time frame to have 1 day time frame in front of them, because they are buying and selling within a day. So that is day traders. But again, there are multiple type of short-term time frame that, again, depending on the strategy day traders are using, they might want to use, but they will use a shorter time frame chart so that they can see clearly what is going on during the day, for them to know where to buy and where to sell. Now let's compare we just compared swing trading to day traders. Swing trading, you can hold it for more than a day. Day traders, they buy and sell the same day. Now long-term investing, let's go back to maximum daily chart. So for long-term investing, you will buy your stocks at a low price and you'll hold on to it for more than a year, and that will be long-term investing. When it comes to taxes, IRS will consider you investing if the stocks you purchase it and hold and held it for more than a year and a day. So we can use that same definition and say that if you hold it for more than a year and a day, it is a long-term investment. But it can be it can be longer than that. And there is some stocks that are purchased in 2023 that for dividend income purposes that I have not sold yet. And because they are negative in our portfolio, and I don't want to sell it at a loss. But that is the idea behind long-term investing. And what I like to say about long-term investing when I'm comparing it to swing trading is, do you see this URI is going up and down, creating mountain along its path? When you are investing long-term, we can assume that this is the valley line. When you have a mountain, you have a valley. So here will be the valley. Then you have the mountain and you have the valley. So if we assume this is the valley, or this is the new valley, that's why we color code it to be where we want to buy the stock. So when you want to buy the stocks and hold it for longer, let's assume you purchase it at the valley line, when it start going up from the valley line, and you want to hold on to it for years. This is in 2022. So the way I like to view long-term investing when you are investing in those growth type of stocks is your money will grow steadily along the valley line. So you can see that even this valley line is upward trending. So if you purchase it at 268, along somewhere here is like 516. So that is the difference between the two prices. So your money will be growing there. So if when you decided, let's say somewhere here is when you decided to sell it, that you need that money and decided to sell some shares, that is like 434 versus 268 or so that you purchase it. You will still have profits. If you turn out to wanted to sell it when it was somewhere here, then your profit will be more. But the thing is, long-term investing, I like to consider that like your money is growing along the valley line. So if that valley line is upward, you will be accumulating money in it along the way. Swing trading is about locking in those swings above the valley line, locking those rise in price in. So when it's moving away from this valley line and went up and start going down. So if you purchase it, let's say around the valley line, around somewhere here, after you see few higher lows, and you sold it somewhere there. So if you purchase it after 3 higher lows or so, you purchase it at 436 for instance, and you sold it at is it 600? It's a little bit smaller for me to see. It will be more like at around 838. Let's use this calculator here and let's try it again. So it's leaving this support line going up, and you purchase it somewhere here around 407, let's just say 410, and then you sold it before it was done climbing up. So let's say you sold it somewhere here, to be conservative, 811, let's just say 810. So 810 minus 410, you have $400 profit a shares within buying it, where in 2023 July and selling it around October of 2024. So you held it for more than a year. Technically, I will consider that swing trading. You can consider that investing as well, or long-term investing, because you held it for more than a year and a day. But long-term investors, they hold on to the stocks for years and years. But that is the type of swing trading strategy I'm doing right now, starting in 2025. I can hold on to it for months and I don't know if I'll hold on to it for a year, but if I'm holding on to stocks that are negative in my account for more than a year, since the stocks that are positive, I will have to try to hold on to it for more than a year if I know that there is more growth that I can lock in. But again, for somebody that is purchasing for swing trading purposes to sell it there, I'll still consider the swing trading or short-term investment. That is how I would call it personally. Not even long-term investment because it's 1 year a day, but I will call that a short-term investment slash swing trading because I purchased it with swing trading strategy and to swing trading in mind. Because somebody that is purchasing for investing does not have selling in mind, but buying to accumulate in mind, for that to continue to grow and sell it years and years later. I think there is some difference in mind shift here. But for somebody that is swing trading, that person is trying to create a cash flow income out of those investment that person has, not just through dividend income, but more by locking in those growth along the way in, rather than letting it just evaporate when it pull back down to the valley line, of course at a higher price, and then continue going up. So swing trading is about locking in those rise in price in before it pull back down again to the valley line, and then buy it again when they start going up. But just keep in mind that by buying the same stock like that, you'll be paying a higher price every time you are buying. But I do think that locking in those profits will give you will be able to lock in enough that will justify buying it at a higher price than if you didn't sell it at all and kept it from when you purchased it at the valley line originally. So now that this one gave you $400 profit, if we go back and try the investor that will have purchased it, let's say around the valley line at 200, let's just say 260 or 265, and then trying to sell it when it went all the way up and come down here before they need that money. So that will be in 2022, and 2023 is here, 2024 is here, and 2025 is here. Those dotted line are here. So the person trying to sell it from 265, they purchase it, they wanted to sell it at, let's say 530 minus 265, is it exactly half? This is like exactly half. So that person will make 265 profits in it. So pretty much the money double from 2022 to here. The money double. Yes, long-term investing, your money will continue to grow and compound, but it's growing along this valley line. Everything above it, you are not locking in those profits. So if you are investing in an upward stock, or to invest long term, it will be good to pick those growth stocks where the valley line is upward, so that if you decided to keep it for years, you know that upward is upward enough for you to keep accumulating. So there is a stock that is, let's see, AZO for instance. Some stocks are very steadily upward growing. So if we go to maximum monthly chart, for instance, you see AZO. If you are investing in this stock and you purchase it around the support line, the valley line, and it's been growing like this, that valley line, if we assume this is a valley line as well, and you purchase it at the valley line and it's growing upward like this, you'll be accumulating quite a bit in it, even if you do not swing trade to get in. Because again, if we go back to maximum daily chart, you'll know that the swing is not too far from the valley line. For stocks like this, if this is the valley line and you purchase it at the valley line and you just want to hold on to it, you will accumulate a good amount of profits. Again, because the swing away from the valley line is not too far from the valley line to justify you buying and selling necessarily. But if this is the valley line that at some point it will fall back to, and you purchase it, at this valley line somewhere here, and all those accumulation, all those rise above the valley line, you didn't lock it in it through swing trading, and it fall back down to here when you decided to sell it. Here you'll see it's like 1887 minus 1135. 1887 minus 1135, you'll have $752 profit in one share. So that 1135 to where the price is right now, which is 3803. 3803 minus 1135 is $2,668 rise above that support line from where you purchase it. But of course, when it's going to come down to this valley line, it's going to be a higher up somewhere. So that is the difference between long-term investing and swing trading, in my opinion. Swing trading is about trying to lock in those swing above the support line, the valley line, the upswing, climbing up the mountain, locking that profit in, and then when it comes down, it climbs down the mountain to the valley line to start going up again, you purchase it again. So each time it's going up, you are buying it and selling it to lock in that rise, and it will fall back, start going up, you buy it again and sell it to lock in that rise, and so forth. So you are investing in that stock, but in a short period of time to keep locking in those rises in price. That is the strategy I'm using because I'm more of an investor than a trader, and I used to invest or trade using 52 weeks low and 52 weeks rise, 52 weeks high type of strategy to trade dividend stocks. I'll buy them at 52 weeks low and sell them at 52 weeks high. And sometimes I'll hold on to them for more than a year. And I still have some stock that I purchased years before, and I still have them. They are positive in my account, but I'm not selling them. Like Johnson & Johnson and I believe HP. So I have it, and then it became two different type of stocks, and I have both as well if I have not sold them. So IBM was one, but I sold IBM last year because for multiple years it was negative in my account, and it became positive last year, and I just sold it and got out of it because I don't think I purchased it at the right price, but accumulated some dividend along the way. So, and up to 2023 I use that strategy, and in 2024 is when I start swing trading, and I use the short version of swing trading, like I swing traded on a short upturn line. And for 2025 I'm using long upturn line swing trading strategy, but by pulling some skills that I use in my 52 weeks low and 52 weeks high trading strategy to to keep refine my swing trading strategy. I'm pulling my knowledge from my prior trading skills and knowledge to see how I can remold my swing trading strategy to be the way I want it. So it's not like I'm following a way somebody is swing trading, and your way of swing trading could be different from mine. But the way I'm explaining it to you right now, the difference between swing trading, day trading, and long-term investing, you can see that that is the picture in my mind. That is my version of explaining them. And as being somebody that like to buy stocks and have it for a long period of time or so, and knowing that I can make more money by swing trading, and I can generate income over time through swing trading without having to just hold on to the stocks, so that I can sell one share to free cash from it, but I can cash flow those stocks by just trying to lock in those growth in the stocks along the way, is the reason why I'm swing trading this way. When I swing trade last year, I noticed that buying the stocks, selling it, buying it, selling it, buying it, selling it, didn't really. At some point, I asked myself, instead of doing that, if I purchase it here and then I sold it here, will I have make more profits in it than buying it, selling it, buying it, selling it, and so forth? And I noticed that for most of them, I have more profit that way. If I just purchase it here and sold it somewhere there, I make more profit that way. And then that makes me think, okay, let's try that this year. And for that reason, to do that, I stopped buying at on a short uptrend line, which a lot of time is because those are climbing up. They are support lines supporting the upside wall of the mountain. I stopped buying it at those support lines so that I can buy it at the valley line. But again, with my strategy, I had to clearly differentiate the valley line from the support line, the valley line support line from the support line that is supporting the upside wall of the mountain, so that I do not buy it at a support line supporting the upside wall of the mountain. And when it's done climbing up, it will start climbing down and I will get trapped in it. And when we are looking at URI, it happened to me here. Toward the end of 2024, I purchased it again, and then it was done going up and it pulled back. So when it pulled back to the support line that in 2025 I would have preferred to buy it at, I purchased it again. So when I purchased it there, it was not enough of it. It pulled down a little bit, but didn't touch base with this one and start going up. So I didn't sell this one. I have not sold this one either yet. And it went all the way up. I start making profit somewhere around here on this purchase, and I made profit on this one very quickly. But it took all the way to somewhere here for me to make profit on this one. And from there, it reached a new high somewhere here, pull back a little bit, and it's doing its things. But I do think it might continue to go up a little while. Therefore, I'm curious to see what is going to happen on it. Right now, it pulled back to close to where I purchased it before. So all this profit here, I didn't lock it in when I didn't sell it. So for this purchase, which will be around 800 cc to 1021, is almost about $200 $200 profit a share that I didn't lock in here, and it's pulling back. For somebody that is swing trading, short-term swing trading, that is a profit to lock in. I didn't lock it in because I know that from this valley line it could climb up. You can see that it reached a higher all-time high here and did that for about a year. Therefore, when it pull back to and start going up from there and breach, and when a breach that higher peak here, I assume from there it could do it for at least 6 months. So therefore, I wanted to stay in longer to see what is going on, because I purchased it here pretty much at the beginning of this new cycle, from the valley line going up to the mountain, climbing the mountain higher and higher for a while before going down. Therefore, I like to stay in this trade and see what will happen, to see if it is a good idea to stay in higher past the high. It started from here, and it reached new high few times already when it left here. Started from somewhere there. I like to see if it was a good call to remain this long in the trade. It's by doing that you learn through your experience, and then you can learn from those. If it works out, or if it didn't work out, then you know what to change, to see, to let it by is a learning skills. It's a lifelong learning skills, in my opinion, to keep improving what you are doing. So, and that is, in how I will explain those three type of trading, including investing. So, and by analyzing URI yesterday, today is October 29, 2025. We are analyzing before the market opens today. So yesterday the price drop is red, but if we go to our record here to see URI, so we purchased it in 2024. Okay, did I group something here? Let's try here. Okay. For some reason it does not even allow me to. Okay, so URI, so we purchased in 2024 for 863, and then we purchased it again in 2025 for 632, and we have not sold them yet. So you can see for the price we pay for them, how much profit, based on how much is selling right now, how much profit we'll have accumulated so far in this one, and how much profit we will have so far in the other one. So the price right now is close to the first purchase, and this one we have more profit in it, buying it at the valley line. And at some point it went past $1,000 as well. So that is the difference between swing trading, day trading, and long-term investing. Thank you so much for watching. And because we do our chart analysis, we are going to analyze two more. So the next one we are going to analyze is V. So again, with URY, we are not selling it just yet. So V is a Visa, and we purchased in 2024, but not yet in 2025, because again, we selected those two lines to buy at as the valley line, and it has not come down to it yet. And yesterday the price went up. Visa is one that is growing steadily as well. You can see the growth. So if it ever pull back to this, and this is the valley line, this will have been a growth over the above this valley line, that who is investing in a long term will not have locked in at all, from 177 to 346 that it is now. But when it's going to come back to this line, by the time we touch base with this line, if it will ever come back down here, it will still be somewhere higher up. But you see, so some stocks can have quite a bit of growth in them. If you want to invest in them long term, you will still accumulate money along the value line that is up trending. And if you want to swing trade it, I think technically it will be good to swing trade those stocks that are having a lot of jagged, a lot of mountain higher up will give you, like, if this along this support line, for instance, if this is the value line, it's not going too higher up away from it. For instance, this is like 224, the peak here is 282. You can see the difference right there. But there are some other that can be like, they will make a big mountain and then they will come down. So again, those are things you are going to be considering to see how tall those mountains are, to see how, why you want to swing trade and why you prefer to just invest in long term, because it's going to be, the growth is not too higher away from the value line that you purchase it at, that you might decide that, oh, I purchase it at this value line, maybe I can just hold on to it for a year or two and sell it out on it. I won't have lost much there. But if it's going to come down to here, then you will have lost quite a bit of growth that you didn't lock in. So one more that we are going to analyze is WAB. And I think by just trying to swing trade the same stock over and over, you might pick a little bit of those things about those stocks you are swing trading. So you can see this stock, for instance, we have this support line, value line that we like to buy at. We just don't know if it's going to come down to it or not, but at this point it used this as a support line and went back up from there. So we don't know if this is going to be the new value line. It just does not have a lot of touch point for me to rely on it that is going to be the new value line. So there is a possibility it might come back down to this. But you see how tall those mountains are? They are quite away from the value lines here. So swing trading those will be great in the sense that if you purchase it at the value line, you'll be able to sell it somewhere here or so before it's done going up and will decide to come down, or if it's not yet down completely, still selling it somewhere here will be a good idea, because you can see that when they pull back down, it will be and then it went back up. Even at this level, it's still below it. So those are things, by analyzing the same stocks over and over and over, you'll know the one that make those tall mountain. The taller the mountain, the more pronounced the valley is, the dip is as well. And some can have jagged dip quite a bit, and because when they are going up, they will want it to create a support line supporting the upside wall of the mountain, so they will pull back to rest before going up, pull back to rest before going up. But when it just breach just like this, that just means technically it's done with this support line and it's choosing another one as a support line. So is this the support line for the upside wall of the mountain? That means it's creating a chain of a mountain, or is this the valley line, the new valley line? That means then it started a new mountain climbing, which is, I will doubt it, because it doesn't take just few months to reach a higher price like that. When they reach the valley line and start going up, usually it takes a little bit longer than just a few months to reach the higher price, but it's not all the time like that. For instance, from this, it didn't take long before it exceeded this price here. So it can be a possibility that this is a valley line, but time will tell. I don't like to predict the future. I just wanted to observe it and see what is happening, and usually it's after the fact that I make my decisions to buy or to sell. And therefore, just by just looking at the same charts over and over and over, at some point pieces might try to fall in place for you to understand what is going on. It's like a puzzle, trying every single day the stocks is giving you a piece of the puzzle to see if you can describe where that is going, to understand the chart. So, and yes, after a while things will fall into place for you to know if this is a new support line or no, a valley line, or if that is a support line for just again for the upside wall of the mountain, because it's not done climbing it up yet. But every single chart is different, and I just like to have a stock watch list that I can just keep swing trading from to try to understand those stocks chart to better swing trade them. Thank you so much for watching our videos. Thank you for your time. Thank you for all your comments, and thank you for subscribing to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel and ninasoap.com, our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just start small and grow your account from there. When we are looking at WAB though, I don't know if I traded this year, but again yesterday the price went down, but again it's nowhere near where we will learn to buy, therefore we are not buying it yet. But yes, we traded this year. We bought it there and it pulled back on us, because again it was in 2024 we are trading on this short uptrend line, and we bought it there and got stuck in it and sold it there. So we can check how much profit we made on that one. WAB. So we bought it in December for $215, and we sold it in January, okay, about a month later, for $207. So we made $7 profit a share there. Was it? For some reason, I don't know why that since it's getting locked there, but anyway, yeah, and we made, let's see, we made $171 profit on it, on that total. And I think he's saying that we profit per share was about 82 cents a share. So, but yeah, and we is again that is a profit nonetheless. We didn't rush in to sell it at a loss to, you know, to cut our losses. We just kept it and we sold it somewhere. But guess what? This price was barely higher up compared to here. So selling it as soon as it reached a new high here, because this is a new an all-time high there as well, we sold it, and shortly after that it pulled back and we didn't buy it again, because I'm not sure if this is a valid line here or not, and we just keep we are just observing it. So thank you. For more of our swing trading tips, will you please check the list of the playlists in the description of this video. Thank you.